Yeah, hello. So today I just want to walk through our financial. Okay, I'm a solo financial analyst since for work I do mainly as a finance as intern. So right now all I'm just doing is walking through my personal investment strategies and considerations. Today I have chosen Apple Incorporation, and I'll just be looking at the 2025 and 2026 and no, on 2023 financial statements, since the 2025 will have 2025, 2024, and 2023. That's for the income statement, but only 2025 and 2024 on the balance sheet. So on the 2023, it will also have 2023, 2022, and 2021. So go ahead and work on them. So I'm on the data page. I'm on the data tab here, and all we just this is work for for Stanbic Bank. So I'll use the mouse for the moment, but let me come in. But let me first delete. Okay, let me leave this placeholder, and all this information needs to be deleted of sort. No, under the income segment lines and the balance sheet lines as well. And then also the cash flow statement. Okay, I don't want to get rid of my borders, but anyway, I will save this file as another. Anyway, other line items, I leave them again. I'll place in the data. So currently I'll just leave. I'll add another worksheet, obvious. Control N, Control Shift, another. So to add another worksheet, I will just press. Let me delete this one. Just an F1. But you can imagine I don't do that every day because it's just so easy to press. Get it? So that's the case. I've lost my count here for the sheet numbers, but here's how we do it. Then we come back to let me change the view. Change the view back to normal. Then we go to okay, then I go back to Microsoft Edge. I have the 2025 financial statements already open here. And then I zoom it out a little bit to catch the whole picture. So consolidate statements of operations. Just come about, no need to even stress it. Take a picture, a screenshot, I mean. Oh yes, we are going to now have problems of September. September in the capture. Okay, then I think let me remove the years ended in. Initially it will be picture from frame. Oh, sorry. Come to the data tab, get data from clipboard. Okay, so it's already showing your problems. The table is not fixed properly. But anyway, this faster than copying and pasting. As you know, Firefox will already do it for us. Insert anywhere, and boom. What we will spend years copying and pasting has been done for us in seconds. So I'll just pick out this data. Anyway, there's some things they still get wrong, like here. Let me just correct them. Like here, then on the net income line, and okay, let me just lose dollar signs at once. I need to waste time on those small details. Then boom. That. Done. That. So now you can see quick. We've been able to carry the whole thing. Okay. Still it lost that years. Lost this 2025. But you can just simply so anyway, this is a little bit quicker than, let's say, if you are copying and pasting all. Let's say if you are copying and pasting line by line, and you know the tables could be irregular. Next, we can see on Stanbic Bank when we get to use a Word document, a double columned PDF. So it gets impossible to even get everything right. So let me just copy the line items first. And then now, since we want to keep this formatting, I just want to carry this and paste them. Yeah. Okay, I didn't even have to carry these funny headings, but just so these ones. Yeah, let me delete this trash. Then now we just need this formatting. Sorry. Okay. Okay, let me first see what I got wrong here. Let me first copy the formats. Then now overall come and reduce at least. Now I keep them like that. reduce the spacing. I think we're about good. Can't see some figures back right. Oh, no, these ones. These have to be normal numbers. Okay, they're about right. The earnings per share. Oh, so I didn't capture most. Okay, let me go back to Microsoft and I see where I went short on so many spaces in the work. So the products. So products, I have to shift all of this down. Okay, about good. What's the net income? 12,112,010. Okay, I think this is perfect. So anyway, never lose count of your lines like me. I think I'm bold in that. Operating income of other operating expenses. Go to, that's about okay. This unnecessary space, unless the other years obvious get to be longer than this, but I presume they'll be the same size. Then we come to the balance sheet. Anyway, I'm a little bit slower, but I can say there's no more work every single day. So screenshot again. Obviously, I could still have done the normal way. I just created this sheet. By the way, this sheet doesn't always be there. This sheet too, that's why I don't care about it. It doesn't necessarily have to always be there when doing the work. When that was not part of my sheet, so I always have to remember to delete it. Insert data the way it is, insert anyway. Now here we start having problems now. Well, I should see which data is wrong and which is correct. As long as we have 359 to 1 and 359 to 1 here, I think we're good to go here. Pass it. But then now some things it got wrong, or because I put large data, or can first undo this, put in basic. I like make the screenshot large and put in basic data and like small data. Okay, let me pick this whole page. Current assets, total liabilities. This is go back to data from picture in clipboard. I'm good to go. Hurry. Insert data, don't tell me you know something. Okay, I think we're good to go. Then the next set of data, 303, gets it right. The next set of data is here. Shareholders equity. think anyway, we don't care about funny lines that you need apart from this shares, obvious. But other than that, the rest just need basic. You just need the numbers for now. I'll go and read about that later. So insert anyway. Anyway, I'm making errors here, but insert anyway. Let's get it right. Boom. We're about good to go. Let me revise up here. Oh, what happened? What was lost here? Oh, I was wondering. Let me delete this row. Let's carry this. We need them just the way they are. Okay. Control FN since I'm using my Dell. Place you people here. See, we get the whole line. Yes. Control FN down arrow. Get back to where we want to be. Okay. I think let me get this one at once, my guys. And Jones. And carry these two rows. Control FN upper arrow. Cash equivalents. Okay. Let's see. Do fill 3380. The rest of these are useless. Oh. I'm copying the whole. Okay. As you can see, we lost our reference. Just get them back because the two assets minus total liabilities. Okay. Then fill it right. Good to go since so we know we have the right balance sheet and income statements. So now just fill in the cash flow statement. Alt tab. Those people who work in offices quickly switch off. Statement of shareholders equity. I could care less about this, to whoever cares about that, it's their choice. Then the next could necessarily even not care about this because these are just the statement of cash flows since they're just changes in the balance sheet accounts. But regardless, can just pick it up and just put it as a placeholder. So actually, I've spent more time here. I think we're good to go. I cancel that. But anyway, this is how it goes. Since this is for my personal analysis, this is how I'll do it usually. Picking from these 2 years, I'll come to delete this sheet before I okay. So that sheet is done. So now how do we actually get to the data? So down from, as I told you, it was still for Stanbic Bank, we have to come here and manually change all this. all this is trash, but right now let me just keep them there as placeholders. Or let me just put it aside here, just to make it clean. That's what I was talking about. So all this, it's so easy because I can just put equals to AAPL. Okay, no. Yeah. And just come to data stocks. Yeah, it for me my data very fast. Then which other app was there? So yeah, now it gets for me everything out necessary. Show data field card. Okay, this will necessarily have, let me carry it up here. What else do I need? Do I need a beta? Yeah, I need a beta market correlance. I need description. You know, it makes no sense, but still, this the data. Okay, I need market capitalization. I need the price to earnings of this. I need today's open price. I need the shares outstanding. What price is this again? 315. Okay, that's the current price. I need what else? Okay, not giving me the book value. Ways I need the book value. No, that can still be computed here. Share price. Is this 52 high and low? Forget. Okay. I press Control X from there. Control Alt V, pasting only the values. Trash. Okay. Now see how fun it is. Let me paste the formats. Oh. So the beta, all of that. Anyway, this is still too disorganized for now. It's 9:59 p.m. My life is almost done, but you can presume after here, just fast track. After here, Control Shift and da to come to, how do you call it? To come to the financials page. About a J and the price to average earnings, obvious. In 2025 is equals to, just go to the data page, come here with the price to earnings. Price to earnings. The earnings per share, sorry. The earnings that. So just get that. I have to actually need the price to earnings. So we come back to what's the price? Price is that. Okay, was struck. The price to earnings, since the average earnings shall go to plus. Plus 2023 brackets, go back to the bar here, divide it by 2, divide by 3, sorry, and close. It's the average earnings per share for these 3 years. I'm going to put 2 years. Okay, necessarily I would have just had to balance all, but as for the space of time, the price is 48 times the current earnings, the previous 3 years earnings. Okay, a little bit expensive, but what do I know? Then the net worth, just pick the shareholders equity here divided by the, okay, shares outstanding. Let's get these numbers expanded. Oh, what did I press on? Oh, I pressed the wrong numbers. T2. Let's go back and press it. Profile T2. Okay, still, but this time. Ooh. Now I'm curious. What was there? Now I'm curious. What was the return on equity? Return on equity is the net income divided by the shareholders equity. Return on equity. What am I getting wrong today? Wow. What am I getting wrong here? 1.52. Let's go back to the data. See what data is this. This is from divided by not. Come on, financial statements again. Net income divided by shareholders equity. So I don't know what I'm getting wrong here. Okay. I think next time someone should tell what is okay, those I already had placeholders there, so I don't know why these are still showing us multiples 1.4 1.5 times. return on equity. Oh, see why. I see why. Control C, I'm going to paste it here. Oh, I'll delete this. Let me just check this out. Okay, no, it's a total waste of time, but let me just check what I got wrong here. Divided by the shareholders' equity, Steve Jobs' money. So even here I hadn't converted to percentages. Okay, yeah. Let's just increase the decimal places. Not bad. So 151%, a very high return on equity, but the company has so many shares that the equity divided by shares is too small. So that's where we are. Anyway, I've been my first live stream. Tried what I tried. That's about how we go. Maybe finally, let me just create in the chat section. What chat should I create? Anyway, if my boss asks for, since I'm not working, but I presume if a boss has to ask for this, my DCF model is too disorganized. That's all nonsense from the work and the free cash flow schedule to others, the discounted cash flow sensitivity analysis. Anyway, these things will take time because initially for Stanbic, I didn't create them, or I created them, but in the other document, I saved the document as different. So this document is just a template, overall template. So that is it. But now you can see how much data I'm missing here. But in the initial cases, just come here if the price is too expensive. Even if return on equity per se is too good, I say let's see the price to earnings. Price. Okay, what is the price? The price is how many times earnings per share. The price is okay. They didn't leave that as a multiple. 42 times. So not too far away from the average earnings, but the price is currently 42.09. Verify here. Can still go back a Google search to earnings ratio. Yeah, we're looking for price to earnings ratio. Not too funny things. So the PE is, let's see, financials. I just missed it there. Anyway, where is the PE? Oh, wait for me to leave the page. Where is the PE? Price is 36 to 30 times the earnings per share. Which earnings per share this week we're using? With the, let's get serious everyone. Anyway, okay, as I'm not investing, so they've used the diluted EPS, EBITDA. So I even can take a shortcut from here, pick the EBITDA lines from here. I just adjust them as I go. But that's how it is. It's that easy. But usually, this wouldn't be my case now. I'll just simply let me save this as Apple. Save as. But hurry up, hurry up. We don't have time. Let me go to documents, just save it quick. A P L 25. What's the other one doing there? 25. Okay, let me save it on the date 19th because I have another one there. Okay. Not a good way to save it, but who cares? I don't have a boss that's going to read it, but usually it would have to be 2026 AAPL 2026. No, 8th, 19th of the 8th, 2026 AAPL. Can see, can even be more fluid than that. Just save it there. Whoever wants to find it will find it the other 2025. Okay, since no need for the year even since all the years will be in the same document. But in case should I say change anything or commentary on the valuation, I necessarily have some fluid here. Maybe on the reports when generating a report, that's when you can change everything overall. So that's how it will go about. But on this document, there's price movements thing just to calculate the beta that I have not. Who cares? Financial document, what I can verify something, but the variance and all that to calculate the slope and find the beta. This was for Stanbic Bank, Uganda, but you can see the case. So usually I'll just come to price to average earnings. In this case now, it's already too high, just a total waste for me. So what would I do on an initial day? Let's come to a stock screener like FinVis. Okay, I'm showing out what I usually do. Okay, since I'm on personal level, I just come to the screener. Oh, what do I want? Fundamentals. Okay, it's descriptive. I want in USA alone. I can change the sector or the index, the exchange it's registered from and the price to earnings. Just come and go to low under 15, but then it doesn't have to be below 0. So just put in that kind of information. And then if I want anything to do with price to book value, AV, beta, but usually I'll just start on the price to earnings, and then with the sales growth, revenue. Okay, there isn't much to do over here, but a quick ratio maybe could help. What do you want? Over 1.5, over 2, over 1, okay. And then go to 300 and what? So then we come now. I'll call the volume, and the good thing I've already placed. Let me first put the volume as a big determinant. So we go to the highest volume super macro computer. Then since I've not checked, but usually just come see the chart, never look at the daily chart, obvious. Lose yourself, but simply come to monthly chart, have it go down. Obviously, you still need to check Google because see this one, it doesn't make sense. Keep it on your daily chart, and then come down to the price to earnings. The forward PE is this. That means they're that doesn't necessarily mean they're going to be cheap next year. That means the estimated earnings per share next year are too low. And wait, hold on, are too high or too low. Anyway, it's according to the shares and what. So no dividends. I just quick look on things. The income is 2.2 billion. Sales, so from 39 to 2 billion. Something eating up that money, but who cares? I think management know themselves. Yeah. And then just look at the PE, the earnings per share growth, the sales volume growth. So this company is actually doing well, like real well. Super micro computer, but then you just come here. Okay, I could actually have gotten my balance sheet from here also, but I don't like this thing. I'll just capture you. to subscribe here. So it's not totally free, but it can help a lot. So you can see the recurring EPS, the net income, you can see the growth over time. Yeah, the basic EPS. So we get all these things here in a nutshell. And since this is a table, clean table, just come here, screenshot your thing and say run back to Power Query and get the data from us, a picture, and just change. So this Finviz, yeah, financial visualizations, and it's great. It's a great option for anyone out there. So I have very many things to look at here. Could also still start using the PE ratio. Not necessarily a good idea, but we need the lowest here, so the price to AWL, this software company, AWL Incorporation, not bad, but at the price to earnings at 0, that means what could be the case here? Okay, I'm curious now. See, these are some of the things. It's supposed to be working, supposed to be doing something, but such companies take your head off the thing. So what makes the price to earnings? It has a negative yes, earnings. So you can just see the earnings per share negative over the years. So that won't be a good Jet AI. I've checked this one enough times, so a total waste of time. Always the other airline company, I'm seeing it, but it's a good start. So price to earnings. Let me remove the filter on it. Remove the filter on it. I need now the cheapest. Okay, leave it like that. I need now the cheapest prices. So, ah, so where is it? Anyway, be wary of this open sheets. But if since now some of us don't have a lot of capital, this will come from Airship AI Holdings, Trash, Jet AI. Okay, not Trash, sorry, but I'm saying Therapeuticals. Unless you tell me there's something, there's no reason for a therapeutical company. And then you see unhealthy earnings of sort. So that's it for today.